Hey everyone, so today we are going to tackle a topic that sounds, super complicated, technical analysis. But I'm going to show you how it's really not about crazy math. It's much more about understanding what the market is thinking.
Okay, let's dive right in. The biggest thing that trips people up? It's the name itself, technical analysis. It just sounds so intimidating. But what if I told you it's not really technical at all?
I mean, this is the question, right? Do you really need to be some kind of math genius to figure out what these squiggly lines mean? Or is this all just a fancy way of guessing? Let's just go ahead and bust that myth right now.
I just love this quote because it hits the nail on the head of how a lot of people feel. It just seems like you're randomly poking at a screen and hoping for the best, right? Well, let's pull back the curtain and see the simple logic that's really going on here.
Honestly, the first wall everyone hits is that word technical. It's kind of the worst name for it, really. I mean, when you think about it, fixing an engine, that's a technical analysis of a machine. This is something totally different.
So, you know what? Let's just rename it in our heads. Forget technical. Instead, think graphical analysis, or even better, behavioral or emotional analysis, because that's what we're really looking at, a picture of market psychology. It's this constant tug of war between optimism and pessimism, greed and fear.
And check this out. This is not some newfangled idea that came out of Wall Street computers. This stuff goes back for centuries. I mean, think about that for a second. Japanese rice traders in the 18th century invented the candlestick charts we still use today. It has always been about tracking human behavior.
So, if this is all about human behavior, what are the actual rules of the game? Well, the entire philosophy of technical analysis really just boils down to three simple core beliefs. Let's break them down.
Here they are, the three pillars. Number 1, the market discounts everything. Number 2, prices move in trends. And number 3, history tends to repeat itself. Literally every single person who looks at a chart is, whether they know it or not, operating on these three ideas. So let's look at each one.
First up, the market discounts everything. Now, this is a huge idea. It basically means you don't have to read every single news report or financial statement. Why? Because the price you see on the chart is already the sum total of all of that information. All the hopes, all the fears, all the knowledge of millions of traders, it's all baked right into that one number.
Okay, number 2, prices move in trends. This is where we get that famous saying, the trend is your friend. The idea is just like basic physics, right? An object in motion tends to stay in motion. So a price that's moving up is, statistically, more likely to keep going up than it is to just suddenly turn on a dime and reverse. So figuring out that direction, well, that's the whole game.
And finally, the big one. History repeats itself. And why does it repeat? Because people don't change. Human psychology, with all its fear and greed and excitement, that's been consistent for centuries. And this chart pattern here is a perfect example. It's sometimes called a double bottom or a W pattern. People have been spotting this for over 100 years, and it still works because the human emotions that create it are absolutely timeless.
All right, so let's take that idea of the trend and dig a little deeper because it's pretty much the most important tool you have when you're starting out. But here's the catch. It all depends on how you look at it.
So take a look at this chart. If this is all you saw, this little 5-minute window, the story seems pretty clear, doesn't it? The price is dropping, it's a downtrend. A lot of new traders would see this, and their first instinct is sell, sell, sell.
But watch what happens when we just zoom out. All of a sudden on the 4-hour chart, that scary downtrend we saw, it's just a tiny little dip, a little pullback in what is actually a massive long-term uptrend. This is why perspective is literally everything. You've got to look at the big picture to see the real story. Okay, so we got trends, we know prices move in these general directions, but why do they stop where they do? Why do they turn around? Well, this brings us to the next really fascinating layer of market psychology, these invisible barriers in the market. And we call these barriers support and resistance. Just think of support as a price floor. When the price falls and hits that level, a bunch of buyers jump in and say, hey, that's a bargain, and they start buying, pushing the price back up. Resistance is just the opposite. It's a price ceiling. Sellers look at the price and think, wow, this is getting a little pricey, and they start selling, which pushes the price back down. It's a psychological battlefield.
Now, here's where it gets really, really cool. What happens when the price smashes through one of those levels? When a resistance ceiling breaks, the whole psychology of the market shifts, and what you'll see over and over again is that old ceiling becomes the new floor. We call it role reversal, and it's one of the most powerful ideas on a chart.
So, we've talked about the core beliefs, the power of trends, and these psychological floors and ceilings. Let's kind of pull it all together now and see just how far these ideas can really take us.
And here's the thing, because this is all about people, it works on almost anything. Stocks, currencies, oil, the S&P 500, you name it. If humans are trading it and you can put it on a chart, these principles apply. The asset itself doesn't really matter. The human psychology behind it does.
So this is really the most crucial point to take away from all of this. When you're looking at a chart, you're not just looking at lines and numbers. You are looking at a picture, a visual map of the collective behavior, the collective emotions of millions and millions of people all making decisions at once. You're literally reading the market's mind.
And that brings us right back to where we started. The next time you see one of these charts covered in lines and indicators, just ask yourself this. Is this just about drawing lines, or is it really about reading the story of human behavior? Is it technical, or is it fundamentally human?